This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on Inauguration Day in the United States, January 20th, 2017. Our time is 8:45 Mountain. Radio show runs Sunday afternoon at 3 on 630 CHED. If you ever miss a radio program, catch us on Harold's websites, HESradio.com, rarecoloreddiamonds.com. The shows are archived, streaming live there. We should mention next week, we are going to be on early from 12:30 to 1:30 in the afternoon before the NHL All-Star Game representing the Oilers, Connor McDavid in Los Angeles, the Kings 50th anniversary, and they have the All-Star Game. We're on right before the game next Sunday. Connect with Harold. RareColoredDiamonds.com is his website. Telephone number 1-800-432-1022. 1-800-432-1022. The website, RareColoredDiamonds.com. And our featured diamond of the week. We'll talk about diamonds in the second half of the program. An outstanding article from the Wall Street Journal all about colored diamonds in the second half of the program. Our featured diamond is a 1-carat radiant cut fancy pink VS2 Argyle. It's a beauty. It's absolutely gorgeous. And as Harold said, it's the rarest of the rare, and we'll talk more about it. See it, rarecoloreddiamonds.com, featured diamond of the week. As we're taping our program, he will be inaugurated and sworn in as the 45th President of the United States, Donald J. Trump. His press secretary, Sean Spicer, said that Donald Trump would act on promises to withdraw from the Trans-Pacific Partnership trade deal and renegotiate NAFTA very shortly after his inauguration. Now, one of the things, Harold, that happened this week, it was quite interesting. Donald Trump came out and jawboned the dollar down, the U.S. dollar down. He said, oh, it's too strong. Then Janet Yellen came out, gave a speech, very dovish, and dollar, obviously, a person who believes in a strong dollar, the U.S. dollar went up. Then in Canada, what we had the Canadian dollar go up because the U.S. dollar went down. Now, obviously, we're seeing the dollar pull back, the Canadian dollar pull back as a result of two things. Janet Yellen, also the Bank of Canada head, Pelose, coming out and saying, because of Trump, the uncertainty surrounding what he will or will not do, we may need to cut rates in Canada. We're at 0.5 point. We may need to cut our interest rate. So as a result, the Canadian dollar went down. And, of course, in the United States, they're going through the process of picking the different cabinet members. U.S. Treasury Secretary nominee Steve Mnuchin endorsed a strong U.S. dollar in the long run while bemoaning the currency's present strength. But, Harold, the truth is, Janet Yellen came out and said they're going to be raising interest rates 3 times. In Canada, we're talking about a rate cut. That means a stronger U.S. dollar, a weaker Canadian dollar, and people should take advantage of it.
You better believe it, Randy. This is a no-brainer, in my opinion. It's a phenomenal opportunity that we've been involved in, for many, many years now. The Canadian and American dollar are important currencies, obviously, but the U.S. is the only country in the world right now that can raise interest rates. Every other country is cutting interest rates, and if Canada cuts the rates, it's going to be down to 0.25 point. Very soon in Canada, you're going to see that the rates are going to go negative, and what that basically means is that when you put your money in the bank, and we've always done this, throughout our entire lives, this is the first time that this will ever happen, but when you put your money in the bank, you get interest. You're putting it, the thought process is you're putting the money in the bank. They're going to pay you interest on it. They're using your money to loan out, to make loans to other clients and making a profit. That's how banks work. However, interest rates are going negative. So what that basically means is that by keeping your money in the bank, you're going to have to pay the bank like you're paying them interest. So it's a ridiculous thing. It's actually happening in Europe. We're very close to it happening in Canada, and you've got to change the way that you think. If you believe that you're ever going to be able to retire based on keeping your money in the bank and interest rates, that will never, ever happen. We will never see another time where interest rates are at 10% where we can make any type of return on our money. So the fact is that, yes, it was a volatile week for the Canadian and American dollar. In fact, at one time during the week on Trump's comments, the U.S. dollar dropped by around 3 cents. It dropped from 103 to the par level of 100. The Canadian dollar actually went up at that point. The Canadian dollar was at 134 during the week and dropped all the way down to 131. So what that basically means is that if you were converting Canadian dollars to American, let's say you were going to the U.S. for a vacation, earlier in the week, it would have cost you $1,310 to get $1,000 in American dollars. $1,310 to get 1,000 American. Today, it's $1,330 to get 1,000 American. So the Canadian dollar is weakening. It will continue to weaken as they're dropping interest rates. There's no chance in the world that Canada is going to raise interest rates. There's no inflation at this point here. So, again, the U.S. dollar will continue to be the strongest currency. It's not only going to get back over 103, it's going to go to 110 and maybe 115. So we're going to see a massive increase in the price of the U.S. dollar. For all of us that are in U.S. dollar-based investments, that's a godsend. We're going to make a fortune in the currency markets and for a long, long time. So those of you that are sitting there wondering how in the world do I do this and what does he actually mean, give me a call and I'll explain it to you. It's actually very simple. We only deal in U.S. dollar-based investments. We've converted our Canadian dollars and taken the hit on it from Canadian to American. However, if the Canadian continues to skyrocket, which it will, and the U.S. dollar continues to skyrocket, which it will, and the Canadian dollar continues to fall, which it will, there's a huge spread there that we could make a fortune of money on. So the fact is that you still have plenty of time to get out of your Canadian dollar-based investments. And when I say Canadian dollar-based investments, the first thing that I'm talking about is retirement savings plans. The fact is that if you've invested in retirement savings plans over the last decade, you've got to be extremely discouraged because you haven't made any money. So the fact is, what is going to change that? Is all of a sudden things going to get so phenomenal in Canada that your retirement savings plans are going to do well? No, of course not. In fact, it's going to be the opposite. If you're sitting in mutual funds or in stocks, the chances are that you're going to lose your money. In fact, 90% of the people that trade those markets lose their money. So why in the world would you want to put your hard-earned retirement savings into an RRSP when you're not going to make any money? It defeats the entire purpose of doing it. My company has private investments that deal in U.S. dollar-based investments that my clients are making over 25% a year plus the currency. So if you're not doing that well, you're concerned about which way you're going, you need to call me because I can show you how to get out of your present investments that are not going to make you any money. If you're in stocks, mutual funds, or retirement savings plans, you can kiss that goodbye. There's no chance that that is going to make you any money. You need to be in the right currency, which is the U.S. dollar, and that's a no-brainer at this particular point. You know, President Trump can say whatever he wants, but he doesn't control the currency. In actual fact, it's the Federal Reserve that raises and lowers interest rates, and they're more in charge of the dollar than the government is. So the fact is that I see a massive increase coming in the U.S. dollar, and we want to make certain that we take advantage of that. Now, we're not going to leverage this. We're not going to put ourselves in harm's way and take an unnecessary risk. All we're going to do is convert from a weak currency to the strong currency and catch the increase in that currency, which is going to be substantial. But then on top of that, my private investments are doing amazing. They're returning over 25% a year. I know that sounds too good to be true, but the fact is you've got to look at the investment before you make that judgment, because the fact is that my Canadian clients have invested with me for over 30 years now, almost 35 years, and again, my clients have basically been partners of mine in many of my deals. So that can happen to you also. You need to make a move at this particular point, because the fact is that with oil prices trading in a range, with the real estate market in Canada suspect at this point because of the massive increases in real estate in Vancouver and in Toronto, there's going to be changes. And the banks are the worst place to have your money because of C-15 bill that was just approved about 4 or 5 months ago. There's a lot of problems in Canada. A lot of Canadians don't know about C-15 bill and how the banks are going to steal your money if you leave large amounts of money in the bank. You need to know about these situations moving forward, because a lot of the banking problems are going to result not only from oil volatility, but mostly from real estate problems in Canada. And the fact is that with interest rates going so low and soon going to go negative, if you're stuck in that situation, what are you going to do? If you don't have the knowledge of how to get out of these situations and protect yourself from negative interest rates and all that, you need to speak to us. We've been doing this 35 years, and our Canadian clients are doing phenomenal in the markets with us at this time. So, again, Randy, really all we saw was jawboning this week. You know, we saw gold go up, we saw gold go down, we saw the currencies all over the place. This is not unusual in January, because in December the markets may have sold off more than they should have, so it was called book squaring. At the end of the year, you know, the companies square out their books, and you sometimes see larger moves in the markets than you normally would. January is normally an excellent month for gold. Last year, don't forget, in January, in 2016, gold went up 35% in the first half of the year, and then it came crashing down after that. We saw a strong rally from 1120 to 1220 in gold in January this year. But now it's back down to 1,200, and I think going to go lower. I'm negative on gold short term only because I'm anticipating that the dollar is going to skyrocket, and there's a direct correlation between gold and the U.S. dollar. When gold is strong, the U.S. dollar is weak, and vice versa. And because we're looking for a massive increase in the U.S. dollar, we want to be short gold at this particular point. Over the short term, gold could go to 1,050, possibly 900. But again, we're still looking over the longer term for massive increases in the price of gold. It's just over the short term, while the dollar makes this monumental run, we anticipate exciting things happening in the market. So again, if you're sitting with money in the bank, money in your retirement savings plans, or money in stocks or mutual funds, the chances are is that you're losing your money, and it's only going to get worse for you. Please give me a call. I'll spend as much time with you as you need and explain to you what your options are and bring you up to date as to what's happening in Canada and what's going to work for you and what isn't.
Also, jawboning the currency this week was the Prime Minister of Britain. And we saw that with the British pound due to her talk about Brexit. So it's happening on a lot of different fronts. Borderline currency wars. Great quote this week from Ross Healey. You see him on the Canadian Business Channel. He's the chairman at Strategic Analysis Corporation. He says Friday is day one in a truly brand new regime, completely rudderless from a political philosophy point of view and driven by tweets of the day. The government is Republican in name only, and the outlook remains murky, some by circumstance and some by design. I will stick with the consensus forecast that interest rates and the U.S. dollar will head higher, until we are able to see what will really happen when Trump meets Congress, an irresistible force and an immovable object, when I'm sure we will start to find out what bare-knuckle politics is all about. Connect with Harold if you agree with us and you want to learn more about shifting money into U.S. dollars, taking advantage of the programs Harold has today to start making money immediately instead of sitting in a money market account or GIC barely making 1%. Connect with Harold. RareColoredDiamonds.com. RareColoredDiamonds.com. 1-800-432-1022. Our featured diamond of the week. And we'll talk about a Wall Street Journal article, Demand Soars for Colored Diamonds. That is in the second half of the program. Also, we'll talk in detail about our featured diamond. It is the rarest of the rare. A 1-carat radiant cut fancy pink VS2 Argyle. It's a beauty. See it online. RareColoredDiamonds.com. Featured diamond of the week. One of the top stories that came out this week about the Canadian dollar. 2017 could be a very bad year for the Canadian dollar. The loonie has a tumultuous year ahead. It could slump as low as 65 cents U.S. if things get really bad, according to one of Canada's leading economists. We see in our base case forecast, it's moving down to at least 72 or 73 cents, but there's the risk of a much steeper slide if trade barriers emerge, according to Avery Shenfield. He's the chief economist at CIBC. The loonie has been on a roller coaster of late due to the election of protectionist touting Donald Trump and an OPEC agreement to cut oil production. These factors, along with the U.S. Federal Reserve interest rate hikes, will continue to guide the loonie's worth in 2017. We could see a modest weakening in the exchange if oil doesn't make any further gains and U.S. interest rate hikes happen while Canada stands pat. But there is the risk of a more serious slide if some of the protectionist measures that the Trump administration is mulling over actually come into effect, said Shenfield. We could easily see the Canadian dollar somewhere in the 65-cent range. That's not the CIBC official forecast, but he added, the hope is cooler heads will prevail in Washington. Some projections have the loonie going even lower. Macquarie Securities North American economist David Doyle predicted the loonie will fall to 59 cents U.S. in the coming years. And we've talked about that as well. And one of the big stories here in Canada this week, Bank of Canada, they stood pat, did not raise or lower interest rates. Pelosi came out and said that a rate cut remains on the table amid Trump uncertainty. And one of the things, doing a lot of reading this week, that you really hear many different people saying, including the former Prime Minister Stephen Harper, that with Trump at this point, there's so much uncertainty, we don't know what he's going to do. Obviously, he's talked about repealing Obamacare. There will be executive orders on the very first day that we'll hear about shortly. As well, he wants to obviously cancel the United States participation in the TTP and renegotiate NAFTA. Canada and Mexico are prepared for that. But beyond that, we do not know what is going to be happening. And Harold, as a result, it's a real wild card scenario, but quite easily we could see the Canadian dollar down to 65 to 59 cents based on the economic and protectionist, obviously, circumstances led by the new Trump administration in the United States.
It's obviously a concerning situation if you just sit there and don't do anything about it. But the fact is that if that's what the case is going to be, then there's going to be a 50% difference between the Canadian and American dollar. How in the world do we not take advantage of that? We'll make a fortune. You could make 50% return or close to that on the spread between the American and the Canadian dollar if that's going to happen. And I truly believe that it will. We've seen it happen before, and it is going to happen again. So just to sit there and do nothing, let me give you the best example of that. We have several clients from Europe. And when Brexit was happening, I had a strategy because nobody knew which way the vote was going to go. But if you sat there and did absolutely nothing, you were taking the risk of losing a major part of your portfolio. So because we expected the move in the currency to be so extreme, we bought a combination of deep out-of-the-money calls and puts just in case the market went either way. And what ultimately happened is that the market plummeted by 25% in one day, and these were heavily leveraged options, which meant that we couldn't lose more than what we paid for the option. But my clients made 500% return on their money in 1 hour. By doing that, so the people that didn't do it lost 25% of their net worth in 1 hour. So to sit there, if we think that the Canadian dollar is going to drop to that level and the U.S. dollar is going to go to the level that we're specifying, why wouldn't we want to do something about that? We have an opportunity to make an awful lot of money as opposed to sitting there and watching as 20% or 50% of your net worth disappears out the window. That's criminal. You don't want to do that. You want to understand, and I know the currency markets can be a little bit difficult to understand, but I've traded them for 35 years. I've called the moves in currencies that nobody else has ever called. So, again, you're dealing with somebody that knows these markets and knows what to do, but on the other hand, we're extremely conservative here. We're not leveraging. We are very cautious, and all we're doing is trading the actual currency. We're converting Canadian to American at the right time, and then we're putting that money into investments that are returning over 25% a year. What a phenomenal situation for our clients. So, again, if you'd like to learn more about that, by all means, give me a call. There's no doubt in my mind that the biggest money is going to be made in currencies, and we're right on top of that. You need to call us so we can explain how you, too, can get out of your Canadian dollars and into U.S. dollar-based investments that can actually secure your future for you. Because if you just sit there and don't do anything, understand that you will never, ever retire if you have your money in a retirement savings plan, because you're losing on it, and you have for a decade now. And then on top of that, interest rates are going to go into negative territory, and you're going to be actually paying the bank interest yourself as opposed to the bank paying you. That's how frightening these situations are. Give me a call. I'll spend as much time. It doesn't matter how much money you have. I will speak to you and give you the same consideration that I would any of my clients. All I want is if you're a listener or a client of our company, I want to make certain that going into this next major rally that we're on the right side of the fence.
Speak with Harold, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. Get our free weekly newsletter from Harold. It's the companion to our radio program. You'll see the same material that Harold and I are reading on a weekly basis and the material that we use for our show. Connect with Harold, 1-800-432-1022. The website, rarecoloreddiamonds.com. And one of the things that Janet Yellen said this week, the head of the Federal Reserve, they expect 3 rate increases this year in 2017 and more in 2018 and 2019. Here in Canada, there isn't even any talk of rate increases until maybe 2019. Gives you an idea that Canadian dollar down, U.S. dollar up. Learn more. Speak with Harold, 1-800-432-1022. Going to come back and talk about diamonds. There was an outstanding article from the Wall Street Journal this week about diamonds, colored diamonds. We'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on Inauguration Day, January 20th, 2017. Our time is 9:10 Mountain. Radio show runs on 630 CHED in Edmonton. Sunday afternoon at 3. Next week, we are going to be on from 12:30 to 1:30 prior to the NHL All-Star Game, representing the Oilers, Connor McDavid in Los Angeles. It should be an outstanding All-Star Game, and Harold and I, we are big football fans, and our teams are playing on Sunday. Harold's Patriots playing Pittsburgh, and my Packers playing Atlanta. So good luck to the Packers and good luck to the Patriots today. Should be some good football. Connect with Harold at 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week is a 1 carat radiant cut fancy pink VS2 Argyle. And one of the things that you had said about this diamond, Harold, it is the rarest of the rare. Argyle pink diamonds usually aren't 1 carat. This is a rarity. It's a beauty. And for those that are looking to start a diamond portfolio or add to a diamond portfolio, this is one people should look at and consider.
Oh, you better believe it, Randy. Again, this is an extremely rare diamond because 95% of the pink diamonds come from the Argyle mine, which is a mine in Western Australia that produces 95% of the pink diamonds in the world. So the fact is that they produce very, very few. And 95% of those diamonds are under a quarter of a carat. They're known as the most concentrated form of wealth on earth, something that small, a quarter of a carat. A carat diamond is about the size of your baby fingernail. So that's approximately a carat. So the fact is you can understand that when these 15 and 20 and 25 carat diamonds sell, they're just so ridiculously rare because very seldom do you see anything like that. But to get an Argyle diamond, pink diamond, that is a carat or over is nearly impossible to get. Even at the Argyle tender, which is the biggest diamond event of the year, and that's where Argyle takes their best 55 diamonds that they've collected throughout the year, that they've mined and cut and polished. They take them around the world to 6 different countries, and very high-end dealers and jewelers get to bid privately on these diamonds. You get to bid on a private bid, and then you find out a few months later whether you won anything. But most of the diamonds for the Argyle tender are a half a carat to possibly a carat. That's how rare these diamonds are. So to be able to get a 1 carat radiant cut, which is a square cut pink, it's a beautiful fancy pink diamond, and it's got a clarity of a VS2. This is a diamond that will ultimately sell in the 7 figures once the mine closes. Now, the exciting thing about the Argyle mine is that where it produces 95% of the pink diamonds in the world, it's going to close in 3 years or less. Basically, it's owned by Rio Tinto, one of the biggest mining firms in the world. This mine has been in production since 1986. It's known for producing 30 million carats of diamonds a year. Those are low-grade industrial white diamonds that are used to cut other diamonds. But out of all of those 30 million carats comes these magnificent pinks. And that's what this mine is famous for, their pink diamond. Now, the mine is scheduled to close before 2020. That's only 3 years from now. If you're one of the owners of an Argyle pink diamond and you put that away for the next 5, 6, 10 years, you've got an asset that will increase substantially in price. Obviously, depending on the size and the color, there's different colors of pink. There's fancy light pink, there's fancy pink, there's fancy intense pink, there's fancy deep pink, and the rarest of all, which is fancy vivid pink. It's got the highest saturation of color. Then there's different levels of these pinks. There's, vivids. In itself, there's 10 different levels of vivid. So, again, you're talking about a diamond, this particular diamond that is so rare and such a strong investment that the longer you hold on to a diamond like that, the more and more and more it increases in value because you'll never see another one like it. Just like with what happened with blue diamonds back in 2005. In 2005, some vivid blue diamonds came up for sale at auction, and they were averaging about $200,000 a carat. That was back in 2005. That was literally 12 years ago. Do you realize that vivid blue diamonds that are important diamonds now are selling for $4 to $5 million a carat? From $200,000, basically 12 years ago, to $4 to $5 million today. Now, that does not always happen. Obviously, those are for the extremely rare, larger, vivid blue diamonds. However, all blue diamonds have gone up in value. In fact, it's very, very rare to ever find a blue diamond. It's extremely rare to find a pink diamond, but now that the mine that produces 95% of them is going to close, you're talking about an asset that will do nothing but go up in value. Now, diamonds are not a short-term investment. You want to put them away for 10, 20, 30 years if you can. You know, the best story that we can tell you is what happened in 2016 when Shirley Temple's deep blue diamond went up for sale. Now, here's a story, because back in 1940, Shirley Temple's father bought her this beautiful blue diamond when most people didn't even know what blue diamonds were. It was just gorgeous. And he paid $7,100 for it. Do you realize that it sold this year for $25 million? You heard me right, $25 million. So, again, you're saying, well, hell, that was bought in 1940, so that was 76 years ago, 77 years ago. So you're talking about an asset that was kept within the family, and that's what these assets are. You know, I buy diamonds for my grandchildren, and I put them away just like I did for my children. And I put them away for their future. I don't buy them stock. I don't buy them mutual funds. I don't buy them anything like that. I buy them an asset that over time is never going to decline in value, and it's going to do nothing but go up in value. But you got to give them time in which to increase. The other thing about diamonds is that they can be sold in other currencies. You know, right now the U.S. dollar is the strongest currency. So again, that's where diamonds would want to be sold in U.S. dollars. But down the road, let's say 10 years from now, the British pound may be the strongest currency, or the euro, or whatever, and diamonds could be sold in any currency. It's a very exciting time to be in the alternative asset business. Stocks are not a great investment. In fact, in the United States, the Dow is up almost to 20,000. But still, most people that trade that market are losing, because it's very difficult to pick individual stocks, and unless you're just trading the entire market itself, but these are volatile markets that we've seen in the past, could absolutely plummet as well as go up. We like to stay with alternative assets. Alternative assets are not manipulated, you know, like the commodities markets and the stock markets are, and the currency markets from time. So you need to own an asset that is outside of the banking system, that is outside of the stock market and bond markets. It's something that you own literally, that it's wealth in your pocket. In fact, diamonds are known as real estate in your pocket in Europe, because you could literally walk around with a diamond in your pocket worth millions of dollars and nobody would even know it. You could cross a border with a diamond that's worth millions of dollars as long as you own that diamond and have the paperwork to show it. But you cannot cross the border with more than $5,000 in cash, gold, or stock. So, again, during these tumultuous times, where we're loaded with uncertainty, where at any time anything could happen, you need to hedge yourself. You've got to make certain that you have all of your bases covered. I know that just by me saying not to be in the stock market is not going to change your feeling, because in a lot of people's mind, that's a safe, something they're comfortable with, real estate and stocks. But we've seen massive losses before in both of those markets. And with what's happening in Canada in the real estate market, you don't want to be heavily invested in that market at this particular point. So again, you need to diversify. We have investments that are based in U.S. dollars. We have investments in U.S. dollars that return over 25% a year to our clients. If you're not making that kind of money and you're concerned about your retirement and your future and which way you're going, all you have to do is pick up the phone and call me, and I'll spend as much time with you as you need, explaining what your options are, going over your portfolio with you, letting you know what to keep and what not to keep, and making recommendations to you. Whether you do business with me or not, the fact is that we do know these markets extremely well. We were the one company back in 1999-2000 that recommended gold at $250 and watched it go all the way to $1,900. We literally had clients that became multi-millionaires because of what happened in the largest bull market of all time. But it wasn't only gold and silver that we called. We did the same in the euro, and we did the same in the oil market. We did the same in the diamond market. And now what we're very good at is picking trends in commodities, and the next major trend is in the U.S. dollar. And we need to take advantage of that because there's an opportunity to make an absolute fortune in it, and it'd be a shame for you to miss out on another massive bull market. Then we also have the opportunity to invest in diamonds, especially pink diamonds from the Argyle mine, because we will never have another opportunity to invest in a diamond like pinks, where 95% of them come from one mine, and that mine is going to close. That will never, ever happen again. This is an opportunity that I like to compare to people that trade the lottery. If you play the same numbers every single week, and all of a sudden you didn't play your numbers one week and they came in, you would never, ever be able to live with yourself. The opportunity to make all that money and you didn't do what you normally do. Well, we have that same opportunity in pink diamonds. We will never, ever get the opportunity to repeat this again, and if we miss out on this, this is something that we're going to kick ourselves for, because when you see how these prices increase in value, when this mine closes, it's a phenomenon that will never, ever happen again. So let's talk about that. We have diamonds starting in the $40,000, $50,000 range that could go up 5 to 10 times that amount. You need to give us a call and let us show you how to make money in the alternative asset market, and now is the best time to do that.
Speak with Harold personally, privately. The call is free. Anything discussed, 100% confidential. 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com, our featured diamond of the week. And this is a rarity because it's so large for an Argyle pink. It's a 1-carat radiant cut, fancy pink VS2 Argyle. If you'd like to see it, go online to rarecoloreddiamonds.com, featured diamond of the week, and speak with Harold about the investment opportunities surrounding this diamond by calling 1-800-432-1022. Get our free weekly newsletter, the companion to our radio show. You can go through it in minutes or spend hours if you want. One of the stories that we have this week is just outstanding. From the Wall Street Journal, they did an article on colored diamonds. Demand soars for colored diamonds. Investors seek higher returns, have moved into an area once the preserve of wealthy collectors. Last spring, Mehar Mazani, a Geneva-based fund manager, placed a 4.08-carat pear-shaped gem against a special ultra-white paper and peered through it with an eyeglass. He liked what he saw. Several days later, after 10 minutes of a negotiation on the telephone with the stone's New York-based seller, he and his partner purchased. They invested in the vivid orange diamond for more than $1 million per carat. Deals like this, high-price purchases of colored diamonds by investors, have become more commonplace in recent years. Colored diamonds, created when a chemical element, such as boron or nitrogen, is trapped during a diamond's formation over millions of years, are part of a definite boom in niche over-the-counter luxury markets that were once the preserve of wealthy collectors. And it's someone like Harold Siegel, who 10 years ago, in 2005, started rarecoloreddiamonds.com, came out with his report, Naturally Fancy Colored Diamonds, the best-kept secret. Harold was one of the early people, one of the pioneers in this colored diamond market, educating people that, yes, we could invest in these diamonds for not only luxury, but investment purposes. You could actually wear the investment, the wealth that you have as well. And they go on to add, and I thought it was quite interesting, some diamonds, this is quite a long article, but definitely have Harold send it out to you. Some diamonds, such as red diamonds, are so rare that only a handful are known to exist. The GIA says its laboratory didn't see a single red diamond from 1957 to 1987. Think about that. Didn't see one red diamond from 57 to 87. A stunning figure. In this article, They actually quote Eden Rachmanov, a person that Harold knows. He's a dealer within the business of colored diamonds. He says, in bad times, it's a very good place to keep your money. In good times, it's something to enjoy, but still a very good place to keep your money. Get this Wall Street Journal article from Harold. Demand soars for colored diamonds. We can send it out to you. Connect with us. 1-800-432-1022. 1-800-432-1022. RareColoredDiamonds.com is the website. And take a look at our featured diamond, the 1 carat radiant cut fancy pink VS2 Argyle. It is absolutely amazing. And Harold, I congratulate you. In 2005, you brought us the report and the website, RareColoredDiamonds.com, and here we are in 2017, and the Wall Street Journal is writing an article praising and touting colored diamonds, the rarity and the investment aspect of these diamonds. And you were there at the beginning, and I know a lot of people who have listened to our radio show have taken your advice and done very, very well.
Well, we're very excited about it. Again, it's an asset that is extremely rare and beautiful, and those that own them feel exactly that way. I mean, to hold an asset like that in the palm of your hand and know the wealth that you're holding depending on the color. You know, yellow diamonds are a very good investment. Yellow flawless diamonds, they go up by about 15% a year. You know, then you've got the pink diamonds and the blue diamonds and the green diamonds. Greens are the next blues, in my opinion. I think the green diamonds are going to skyrocket in price, and that's what we're starting to mine and cut at this point. So I believe the next major trend in these amazing diamonds will be in green diamonds. And by the way, green diamonds turn green because of uranium in the ground. You know, the mine can produce mostly white diamonds, but if uranium creeps into the ground, a few, very, very few of those diamonds can turn green. And that could change the price from $20,000 to $3 million. That's how crazy this market is. So, again, I'm very excited about what's happening. I'm excited going forward that the alternative asset market, especially colored diamonds, is doing so well. We plan on doing a new auction in February. It's taken a little bit longer because we have a live virtual auction site, but on top of that, we're building an eBay type site so we could do longer term auctions that aren't that may go on for a week or two. So that's just being finished this month, and then in February we're going to announce a phenomenal auction that's coming up that will be for diamonds and for gold collectible coins and those type of things. It's going to be an awful lot of fun. We're going to launch it with an amazing auction. So that's coming up hopefully in February. We've been working hard and spending a lot of money getting our site up to speed, and there's not going to be another site in the world like it that does what our auction site does. It's HC Fine Auctions. You'll be able to download the app, and you'll be able to attend our auctions from your iPhone, your iPad, and your personal computer. Again, we're very excited about what's happening in this market.
Connect with Harold, 1-800-432-1022. The website, RareColoredDiamonds.com. Our featured diamond of the week. See it online, featured diamond, 1 carat radiant cut, fancy pink VS2 Argyle. It is so rare. And give Harold a call. He'll be happy to explain all the ins and outs of investing in diamonds, and in particular this 1 carat radiant cut. And it's from the Argyle mine. And look through that Wall Street Journal article about demand soars for colored diamonds. They talk about the Argyle pink diamond tender in there and all the ins and outs. One of the things they have in this article that I think is very interesting, a chart, and it's from January 2005 through September 30th, 2016. It's from the Fancy Color Research Foundation, and it is a chart of the S&P 500 versus yellow diamonds, all colored diamonds, blue diamonds, and pink diamonds. And when you take a look at it, the all colors, the blues and the pinks, and even somewhat the yellows, have done very, very well against the stock market over the last 10 years. And Harold, those are sort of diamonds that have all been lumped together for statistical purposes, but the truth of the matter is, if you buy a diamond that's a little rarer, that may have a special cut, is internally flawless, I guess the point I'm trying to make here is not all diamonds are the same, and you could actually see even bigger increases based on the rarity and scarcity of an individual diamond. But one of the things we recommend is investing in the diamonds individually yourself. That is the best way to go. And Harold, we have about 4 minutes left in our segment here.
You bet. Again, the no-brainer, in my opinion, is the Argyle pinks. Again, to get a situation where a mine that produces 95% of any colored diamond is going to close, especially one as important as Argyle. I mean, when Argyle writes its articles, when they come out with their with the Argyle tender, it's a huge event. And these diamonds are spectacular. All you need to do is look them up and go to our website, rarecoloreddiamonds.com, and look at our inventory of amazing Argyle pinks. And we have some others put away that are unbelievably rare. So, again, depending on your investment comfort level, this is an asset that you need to own, because we will never have another opportunity to do this again. To own Argyle pink diamonds just prior to the mine closing down, it's one of the best opportunities I've ever seen.
Featured diamond this week, a 1 carat radiant cut fancy pink VS2 Argyle. See it. rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022 to connect with Harold. Our top story this week, and it's bears repeating as we close out today's show. 2017 could be a very bad year for the Canadian dollar. The loonie has a tumultuous year ahead and could slump as low as 65 cents U.S., that according to Avery Schenfeld. He is with CIBC. We also had a prediction from David Doyle that we could see the loonie fall to 59 cents over the coming years. And in the past, we've had other predictions from Jared Dillian. He's saying that Canadian-U.S. dollar exchange rate could go to 150 to 160. Janet Yellen coming out saying, yes, we're going to raise interest rates 3 times in 2017, maybe more, and 18 and 19. Here in Canada, Bank of Canada Governor Pelose coming out and saying, well, because of Trump, a lot of uncertainty, we may be cutting rates. We don't know exactly where interest rates are going to be in Canada based on the new president. As a result, our thesis is, and you can speak with Harold about this, Canadian dollar will go down, U.S. dollar will go up. Harold has investments in U.S. dollars that you can take advantage of, doing very, very nicely. And obviously you can take and capture the bonus on the currency conversion as well. Harold, with about a minute and a half left here, now is the time to get into U.S. dollars before we get into the uncertainty of a Trump administration hardcore.
Oh, you bet. Again, but the fact is that the U.S. dollar, if they're going to raise interest rates 3 times next year, they already raised it, at the end of 2016. When you raise interest rates, you're strengthening your dollar. So it doesn't matter what anybody says. If you're going to raise interest rates, your dollar's going to get stronger. And then the opposite is that if countries are cutting their interest rates, like Canada and other European countries, then they're cutting it against the U.S. dollar. So, again, they're going to get you both ways. We need to get into U.S. dollars immediately. Otherwise, this is another situation that you will regret. You have an opportunity to make a fortune of money at a great time in a market that a lot of people don't know a lot about, but fortunately, we do.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
As we tape today's show on the 20th, Inauguration Day, Donald Trump is about to be inaugurated, sworn in as the 45th President of the United States. A side note, the White House, according to Zillow, is worth $400 million. And definitely connect with Harold. Speak to him about getting that Wall Street Journal article on colored diamonds. Our featured diamond, a 1-carat radiant cut fancy pink VS2